Hey, Dan Fitzpatrick here, stockmarketmentor.com, and I want to talk about Tesla. Oh, by the way, we're going to be trading live on Monday morning if you're a member, so get onto the website. You'll see a link in the forum, and I know you'll be receiving an email with that too. Starts at 9 a.m., half an hour before the open, so we kind of have a chance to get set. I know one of the stocks that we'll be talking about is Tesla, so I thought I'd get a little jump on it now. By the way, if you're not a member, you can sign up for a free trial, get your free 30-day membership, and get in on the session. Doesn't cost you anything. So, okay, with Tesla, this thing has just been a monster stock. You know this. I'm sure the reason you clicked on this video was, hey, Tesla, I want to know what's going on. So the real move started here at 1,000. Stock had been trading sideways for quite a while. It finally broke out, started here, and then on this day, you know, that's when the volume kicked in, and you're going, all right, I think we have liftoff away from $1,000. Where are we going to go? And you can do what I'll tend to do is just a measured move. It's really complicated. But brace yourself. Take notes because this is really super complicated. I go from the high down to the low of a big move, and I see 594 points. It's over in the box on the left. We'll call it 600 points down. That's 63%. So this thing had a 63% retracement. That's gut-wrenching. And all but the Teslonians, the folks who look at Tesla as a religion, and they see Elon Musk as the high priest of Tesla, holding through a 62% retracement. And I know you've done it. Okay, good for you. I would have said, why don't you sell it when it hits a stop and then wait and then buy it at what is really an obvious entry point right here if you're such a big Tesla fan. But of course you didn't do that. You held through. Other people, I would not be one of them. I just kind of missed this trade, would have bought here. And now at $1,000, they're up 136%. Okay, so back to the measured move. So I'm looking at this. It's down $600. The way I would measure this move is say, okay, $1,000 is the starting point. And so if the down move here is going to be repeated to the upside, then I'm going to add 600 points to $1,000, and that'll give me $1,600 as a as a price target. Okay, that's how I get the price target for this. If you didn't figure it out by now, I was joking when I said it's really complicated. It's not. It's super simple. There's nothing scientific about it. But here we are. Now what? A couple weeks later, we're up knocking at the door at 1,600. So just like that, like this move that took about six weeks to get, about a month and a half to retrace or to fall. Once we get a breakout here, it's taken 11 days, 8 bars, 8 trading days to get up almost to 1,600. So in my view, the $1,600 price target is kind of in the bag. I would look more at 2,000. I'm serious, and I'm not a Tesla bull. I'm just a chart guy, and I like the way this chart is trading. This thing is just taken off like a rocket ship, and don't short the stock. Don't be selling calls unless it's a covered call. Don't be buying puts. You can trade the stock more confidently because the implied volatility is so high. If you can afford to buy 100 shares of stock, you could go ahead and sell a call against it, and you knock your cost basis in the stock down by quite a bit. Sadly, 100 shares of stock costs you over $150,000. So another way you can do that would be like a bull call spread or something like that. But I'm just talking about buying the stock, whatever you have, hanging on to it as it continues to move up. I would look at the 8-day moving average as your reference. That's the green line here for where support is. And you'll notice this thing hasn't even tested the 8-day moving average. You probably get it down to 5, 6, 6 days really is where this stock hit today. So, I mean, you can literally use these tight short-term moving averages like this as a reference for the trend. The shorter the term or the period of the moving average is that's relevant, I'm stating the obvious here, then the steeper the stock is running, which is the most dangerous. Like the tighter the moving average that defines support, the more risky the trade is. So, 50-day is fine, 20-day is better, 10-day is even better. When you get to 8 days or so, the trend is really, really accelerating. You have to understand that. It's the time when you see a stock trending along the 8-day or even the 5-day exponential moving average, that's not the time to be getting excited unless you already own the stock. It's the time to start really, really tracking it. You want to get as much as you can out of your position, but you don't want to overstay your welcome either. I don't think you're quite overstaying your welcome with Tesla, but just know that this car company is now worth more than all of the other auto companies put together on the planet. So the valuation's really ridiculous, but this trend isn't. You can't argue with valuation. There's no possible way to value Tesla in any way that gives you some credibility and authority. If you want to come up with valuation and say, well, this is why Tesla is valued in this way, I'll just go ahead and say it. Either you're an idiot or you expect us to be idiots for believing you. There's just no logical valuation for this. Embrace the horror and just trade the chart. You'll make a lot of money. I'll see you Monday morning.